Hey, lot. So I just figured it would be easier to just record a quick video. Um, and this is sort of to give you an idea of what we were looking at yesterday and what we traded and so forth. So, um, um, in equities, I trade them through I trade the Nasdaq most of the time. And what we were looking at is Um, we had this Thursday huge liquidation day. Then we had, the typical, obviously, the expected like V-shaped sort of bounce um, that tries to fill the gap, but obviously falls short. And then, it kind of rolls over and then keeps trending to the downside. So we're paying attention a lot here is paying attention to where the areas of liquidity are, where it traded the most volume. We use a volume profile for that. So then um, the 25,000, 870s, 880s, that's a very important area. It's a very important area here because that's where it trades the most volume after the liquidation. But also if we go to a higher time frame, um, we include like all this trading that's happened up in this area. The strongest value areas here are the 25,700s, which was super important and it was very, very relevant throughout all this action here. And then down here, well, we just made it down to this area. So the 25,300s and 200s, that sort of area. Um, So those are the two strongest areas, the two strongest value areas that we're paying attention to, and we just moved basically from this value area down into this value area. So let's go back to the 1 minute really quick. And so yesterday, was it yesterday? Oh, this was yesterday. This was the day before. So, well, let's start from the day before, right? So then we moved from, you know, the highs up here, 26,000, that was unsustainable. That's when we cracked and gave us this liquidation day and then continuation. And basically, this whole thing exhausts into this 25,300 area, 200 to 300, that area, right? And the sort of like um, the reversal sort of, it retraces back into that 25,700 area. That's very important because it was a squeeze and it takes out that level. And we talked about that when we met. It squeezes up into the, above the 800s, 900s. On a more local level, I did just mention that the 25,880s was like the important value area on a lower time frame. So it kind of squeezes into that area, overshoots, obviously, tests here the 900s, but it stays weak. So what we were looking at here at the open was that it was precisely that this thing reverses and comes back into that very important 25,700 area around here. It overshoots and go into that 880s area. Um, um, but it doesn't quite. If we go back to 5 minute, um, it doesn't get. This is the area where it was trading before, right? At 26,000, it doesn't get up into that area. It does feel weak, during the Asia and Euro session, and it's barely trading. Um, it's barely trading above VWAP, and as you can see here, and the action, and I was following it closely. It was just, weak. It was weak. There was a VWAP reclaim. It was just chopping around VWAP. And then into the open, it's just like rolling over and trading below VWAP. So we were expecting this. You never know, but we were expecting this to either chop around or or just get a train to the downside, um, back into the 25,700 area, which is the very important value area that was trading at before. It ended up being a huge liquidation day again, and then it takes that area, blows through that area, and it goes down back into that 25,300, 200 area. So it's been pretty wild. And at this point, if we look at this, you know, um, we were up here in the highs. We kind of get that like jerk reaction back up, then liquidation back down. This is an anchored view up. I've had it anchored since, gee, I don't remember when I anchored this. When Trump first put on the tariffs on China up here. So it's kind of important and it's always relevant, and it's kind of taking out now. We're trading below that anchor view up. Here we bounced and we made this move up, but this was a squeeze, and this was coming after a V-shaped bounce after this huge liquid. So, but it didn't. It was out. It didn't last long, and that we're now back down trading below that anchor view up. So my sort of expectations for today is that we're going to stay here and probably continue to the downside. But even if we get a little move to the upside, the 25,700 is the cap. It's the ceiling, the roof to that move. Absolutely, and we might get it. We might just chop around here around the 500, maybe touch the 500s here and then even continue to the downside, or just chop around, consolidate in this area. But that's sort of what we're looking at today. But yesterday, so yeah, it was liquidation day, and I thought about you because this is again on a 1 minute. Um, on a 1 minute, this is like, if you get that entry here at the open, this keeps you in all the way down. This was huge here, by the way. This is huge capitulation into the 730, 25, 730s here. And it keeps you in. And might have, I mean, you would have any, you know, reasonable trader would have taken it off here because this was extreme price and volume capitulation. But even if you hadn't and you had stayed in, it still keeps you in all the way down. So this would have been, sort of like a simple trade. When during the session we were, because I don't use that, I'm aware of it, but I don't really use these rules. I'm gonna start looking more into that because sometimes I do miss very, outsized moves, because I'm too zoomed in, and it would have been really simple to you know, just trail it with a 9 EMA or 10 EMA, whatever moving average you're using, and that keeps you in the trade. At least a small core position that we leave on until it breaches that EMA. So that's something that we're kind of working on. But I trade it, very focused on lower time frames, and a lot from like ladder and the tape action, and this is basically how I traded it. So we had, again, this is the open and 930, and it flushed. So we had like the 900 would be the whole number, and kind of like obvious area that you're looking at. But again, that 25,880 area was in the back of my head all the time, because that's been an important level. It was an important level on the way up the day before. It was an important, it's an important value area locally, in like in the past like 3 days, I guess. Um, so I refrained from trying to fade or buy, the flushes here into 900. And when we got this one, and this was, you can see here the volume here. This volume candle stands out because we did get sort of like true capitulation here, volume capitulation, and true soaking action here in the 80s. Um, so I waited for that. It actually went all the way down into the very low 80s. I think it even got there at like touch 879 or something like that. So that was my first little trade, fading that thing for a bounce, and it gave me a decent, 20 something, 20-point bounce. Um, and because that was sort of that 80s is the 880s is the line in the sand for me. So once um it's not a short, and I'm not expecting this to be to give us any momentum lower until we breach, or we start trading below that 25 880s area. So this was along here, and I was maybe expecting this to go higher. Actually, at the beginning, I also faded here, this pop here into the 950s, because it was pretty obvious on the tape, and it gave us a really good trade. I didn't capture all this, but it gave me like a this little bit here. So pretty good. Also like a 20-point move. So here, then it stays heavy, it bounces, but it should have, if it was going to go back, it should have like, this was pretty strong soaking action here. It should have just headed up, but it didn't. It stayed heavy and it started making lower highs. So then when we break here below the 25 880s, then I know it's a short, and then I short it here when we get a little pop into the 80s, into the low 80s again, and that's where the real momentum, we know that's already liquidating. So we get this capitulation, this flush here that capitulates in like the 25 840s, which was a sign of weakness, because, well, it should have held the 850s at least, but it just dips below, and it ends up capitulating way below it in the 40s. So that was also a strong, um there was a strong, soaking action here that could be, you know seen on the tape. So that was a bounce trade also that was pretty good, and I was took it, and soaking here in the 40s, and it gave us literally a 30-point bounce here. um that was pretty wild, and ended up even going even higher into the 890s. Um, but then again, lower highs, drifting lower. We're waiting again. If we saw that important action, soaking action here, and important, like, these volume candles here in the 40s. So then when it starts drifting lower and it takes out that area, then we know that we're basically, this is continuing to the downside. So then, um, this pop here into the 30s, 830s, which is just below that low 840 bottom that we made here. It popped once. I think I didn't even take that trade. This Luca took this trade, and he's got stopped out, and then it popped the another time, and he got stopped down and missed it. But this was a perfect entry, and then pure weakness all the way down, flushes here into the 25 800s, and at this point we are just, as I mentioned earlier, the most important value area on a higher time frame is at 25.7, the low 25 700, 730, between 730 and 750. So when you are that close to an important, you're trending towards an important value area, you have to hold, because, and especially if every bit of exhaustion has been reclaimed and it keeps pushing lower, you have to hold into that area and wait for the final exhaustion, because we have a destination area, and that area, because it's such an important, such a strong liquidity pool there, and it's such a strong value area, it's acts like, or it almost acts like gravity, like a magnet. It, like, it attracts, the order flow is going to go there. The big players, um the ones that move size, they have to trade in those huge value areas because they need the liquidity. So at this point, it's it the protocol already that I have ingrained in me is that we need to wait for exhaustion into that. It doesn't always happen like this, but this was a very violent. We were literally up here just below 25,800, and it literally flushed 70 points. And this is a 5 second chart, a 5 second bar. So this happened super quickly. Um, so I think Luca was in here, and then he got lucky and he captured that. I wasn't. Um, and that would have been the whole first leg, basically. And to me, that was it because we're exhausting into the 25,700s, important area of liquidity, the strongest value area in the chart. I'm not expecting anything beyond this. This was so brutal here, and it was, let me look at the volume candle. So it was price capitulation and volume capitulation all compressed in a 5 second bar. This happened in 1 second, actually. It was insane. When this happened, then it's the obvious. You have to be fading this. So this is an obvious bounce. Um, and I have this orange rectangle because this is, we took it, I took it, he didn't. Um, we got it here in the 70s. There's no way we're going to hold this all the way any further than that, but this was already a pretty amazing, 50 points. It ends up, pulling back, but then retracing up higher, all the way up into the 800s. This is basically, it retraced this whole move. This whole move was retraced. And looking back, when we get such a brutal um, capitulation like this, it is expected for this to get and kind of like fill that gap before then deciding whether it's gonna, you know, actually really bounce or not. And in this case, it didn't. And this is where you get the second leg. And at this case, I was not even involved anymore. Um, but this is actually the cleanest. This would have been the easiest one to trade because this thing, when it takes out the seven, you know, I guess you have to wait until it gets below 700. At this point, you would have realized with this bit of momentum here, this is actually volume capitulation here. So when it doesn't bounce from that, but it keeps going lower after putting in that volume candle, that kind of tells you that this is going to be trending lower. Super clean. We don't get real capitulation until here. So, but whatever. I wasn't even there for that. And at this point, then the next value area is it's on a more local level, was in the low 500s. And we kind of get into that area. It doesn't end up, we don't get real volume capitulation, real capitulation, and we get here into the 400s, 480. So, huge day. But then, as you can see, we are so focused on just because I'm paying so much attention to the ladder and the tape, and I'm like, so it's a lot of active trading. A lot of things can go wrong, and if you're getting a bad read, then you make mistakes, and then maybe you think it's a you miss the little cues on the ladder or the tape that are going to tell you if this is going to if it's bounce, if it's a bounce or whatever. So it's a little bit more focus intensive, and that takes me back to what I told you, which is like, and I did use it yesterday um, um, as a reference. I had my 1 minute chart there, and I was paying attention to the 10 EMA, and that's what gave me conviction to be a little bit more aggressive here on this little blip here where we got back in short in the 30s, because it was looking just fine on the 1 minute, and it was very much inside, below that 10 EMA. So um, this I'm gonna be sort of like bringing it more into my trading because it's gonna make it less stressful and it's gonna give me more conviction. Because yesterday, maybe if you're reading things well, everything is going well, but sometimes you're not reading things well, or you're not in the right mindset, or and things can get ugly pretty fast, and you can get chopped up, and you can get make bad decisions. And this thing sort of should be like more like it should bring you back, ground you, and bring you back to to reality. So I think this is super valuable. So these yellow rectangles are the way I would approach it. So I have um, my active trading here, but then if I have an idea from a higher time frame, looking at an idea of where things could go, I should be leaving at least a small core from the beginning, and that one I'm not going to touch it, and that one I'm just going to make sure it's always on until it breaches that 10 EMA. And I think that's the way I'm going to approach it. It's going to be like a hybrid approach where I put on a core and then I trade. A lot of people do this, right? Trading around a core, but making sure that core is always on. Maybe I can even put it on a separate. If I'm trading like micros, maybe I can um, put it on another ladder on the minis, or if I'm trading minis and put a few micros, whatever it is, just so I can leave it there isolated and I don't touch it, and I trail it with the 10 EMA. So whatever, that's the way we traded this yesterday. Um, Obviously, so we traded up to here. I kind of missed this, but then we got on a higher time frame. Like I said at the beginning, we actually filled this whole fucking gap, and we're back down here in this area, the 25, 200s, 300s. I already talked about what I think is coming next. The other thing that we were looking at a lot, and is also a main focus today, is crude oil, because we've been following the whole Iran thing closely, and we had sort of 5 minutes. So we had like this run up here. The 62 area is like a key area that once that area is taken out, then we knew that was sort of like a rally. And the if you go to a higher time frame, let's just do this really quick. If we go to a higher time frame, um, you can see here that the 62 area, just below 62, or you can even expand here into like the 6220s, maybe even 6250s. This is sort of a value area here. But if we go back in time, um, there's actually we should probably look at the daily. Um, Here, so there's a huge vacuum here of volume. We call this like a volume shelf. So once you clear here the 62s, there is a huge volume vacuum that you don't really get that value area, doesn't really get strong again until you start approaching the 69, 70 level. So the way I was looking at this is that if this thing, and this is, by the way, so we are right now at Iran 2.0. Iran 1.0 was last year or the year before, right? 2024, around July or whatever, the first, attacks on Iran, and this is what it did. Um, huge move, and I think it touched 78. So, um, and it was trading in this area, pretty much around 60, the low 60, 61, 62. That was huge. So again, so we're looking at that 62, the 62s, and if we do take out the 62s, the expectation here that I had was that this was gonna rally all the way up into that 69, 70 area. But the thing is, well, that this is obviously dependent, is very news dependent. So this thing, when it broke out 60s here, um, that 62 level, um, it's obviously it starts rallying. Um, it did it first. The first day it did it here because apparently at that point, this was a few days ago, I think last week, it was testing, failed, and then here, bam, it broke out, and the rally started. Look at the volume, how it came in here when this happened, and this, um, right when this was happening, then Trump said something about, okay, something that indicated de-escalation. So the market was already ready to like blow up, and he killed that rally, and then we got this washout back into the low 60s, but it held because it didn't go back all the way down into 59, which is the floor that should be like the floor here. So um actually that was not there, that was here, I guess. So it was already breaking out here, and then he put on that tweet, and bam, it just killed it. Literally killed it. Bam. So, but now, we've started building again, and then here we are breaking that 62 area, and then we're getting this huge rally. And the thing is, it's been iffy, right? So now it's like, so it looks like it's escalating, but then it looks, then it's not. Then we're negotiating, and then we're on and all this thing. So it hasn't completed that rally all the way all the way up into the high 60s, 70 area. It's pulled back. Now things are escalating again. So now we're back in like rally mode. We're like, um, touched here the 61 area, reclaimed here the 62s again, and blah, blah, blah. So we're sort of in that dynamic right now, but we're always watching it. And lately, what happened is after this gap down over the weekend, we sort of found consolidation here, um, around VWAP. It was always trading here around VWAP, but then I'm just going over this because this was part of our day yesterday. So this was a trade yesterday. So then what we got here is a break below that consolidation here, and you can see that there. Um, and you can see how that break below consolidation got soaked here, and you can see that volume candle here. So there it is. This volume candle was just pretty. It was an outsized volume candle, and then it brings it sort of like it bounces and brings it back up into that consolidation area. But when we get something like this happen, then we always sort of, expect that this may have trapped some volume, and then there's like fuel for this to push it up higher. So the first trade, and I actually ruined this trade. I didn't. The idea was there, and I was right, but I just watched the trade. So I was getting in. I had an entry here in the 30s, and we had a target at 63, and I got chopped up and shaken out, and I didn't make it. But it ended up hitting target 63. So that was a trade that we were looking at into the open, and then we shifted focus to NQ. But we were pretty much focused on this. And then here, at the end of the day, then there's that tweet, that news that came out where there was a Iranian drone that was taken down by a jet fighter. So we got this, gap here, and then when we get a news catalyst that creates that gaps like this, we're always seeing if this is going to retrace and take out the highs of that gap. And that's actually a pretty good setup to trade always when it comes to news. Like the gap, usually if it when it comes back down to the base where the gap originated, then we always get a retracement. But we didn't get that right away. There was chop, and this was late, so I didn't capture this. But in the end, it did work, right? It did come back to this area and then touch VWAP, and then bam, sort of trended back up and even actually took out the highs of the gap. So that would have been a good trade. I was not there to take it, um, but this would have been it's in my playbook. It's like a textbook move. I guess you would probably at this exhaustion you would be taking it off because it's already close to the high. Um, and that's a pretty, a pretty high odds setup. And now we're just like, paying attention because it's up here in the highs. It's close to the, it's not up here to the highs that we made before, but it's already, and now we have something to work with when it comes to news and catalysts. So now there's a meeting on Friday, um, but there's also they keep sending drones over and they keep taking them down. Israel wants to attack. Apparently, Trump doesn't want to attack. So things are um, they're not clear, and so I'm not sure how much edge there is right now. But if we had a situation where things are where things are escalating a lot faster, and there's clear intent of going into a, they call it like a kinetic situation. If we were in that mode, this would be rallying harder. And just like it happened last time, a couple of times, a year ago, 2 years ago, is that in the midst of that intense escalation, if we get a piece of news or a statement or a tweet that suggests de-escalation, that is the best trade because that's the one that gives you, that's where there's a ton of volume trapped, and it gives you a sharp, contrarian move, which is actually what happened here when Trump, when this was ready to break out of the 62s, and Trump tweeted something, and Trump said something about, now they're not killing so many people or something like that. And that was a trade. When did that happen? That was a trade here. That's exactly what it was. These are the trades that have the most edge because this is like immediate, instant, like bam, it's like if you're there to capture that news, you know that that you'll get a sharp move lower and then continuation lower, which is what happened here. So at this point, well, last night my thought was that that was the trade that we're looking for, but now not so much because we don't have that clear escalatory environment either. So it's the same thing as in a chart, but you can't see this in a chart, but it's the same principle. We want to be where volume is trapped. So we kind of want to see, that's why we pay attention to Polymarket and the betting markets. Like when there's a heavy betting on something happening, 90% of people think this is going to happen. Well, that's where you're like there to take the trade if it doesn't happen because it has huge edge. So that's when it comes to news catalysts, that's the kind of setup that we're looking for. Right now, it lost strength. It was looking like it was gaining strength. Now we don't know where we're standing, but we're still looking at it. Geez, that's it. So that should give you a bit of an idea of how I view things, how I use market profile to find the important levels on different time frames, and to find those areas of liquidity, because that has a huge influence in how, when I'm in the when expectations on how things are going to move, especially when when they're trending and getting closer and into those areas of liquidity. That is like super a big part of the way I trade. Um, there are other factors, right? I use VWAP a lot. Um, I use these bands and also the slope of the VWAP to give me an idea for if we're getting anywhere near exhaustion. So basically, I'm paying a lot of attention to the geometry of the chart, to the geometry in terms of to find areas where it's truly capitulating. So I have a trade setting up to fade those capitulations, or when it's compressing and ready to break out to create that move in one direction or another, whatever. All right, let me know what you think.